Stock splits are the hottest thing in the market today, and there's a good reason for that. It increases liquidity for stocks, makes it a little bit more accessible for people to buy whole shares. So I'll dig into some of that today, but I wanted to highlight what's being called one of the biggest stock splits in the history of the New York Stock Exchange, and that's Chipotle. It's not Nvidia. Nvidia is one of the biggest stock splits we've ever had, a 10-for-1 stock split, and given the fact the company is now a multi-trillion-dollar company, getting a ton of attention, but that's not the biggest split. It's the 50-for-1 split that's happening at Chipotle, and the details are now out that has been approved by shareholders. And over the next couple of weeks, investors are going to reach what we're going to call the date of record and also the post-stock split day. So I want to go through exactly what those dates are, what they mean for investors, because this can get a little bit confusing. So you want to know what these dates are so you're prepared. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's go to the actual announcement and the official word from Chipotle. This is the release that recently came out from Chipotle, one of the biggest stock splits in history, as they are calling it. The record date, this is the date to know, June 18th. If you are an investor of record on that date, you will be getting 49 extra shares on a split adjusted basis on June 26th. Kind of strange that there's an 8-day lag between the date of record and the split actually happening. But that's exactly what we're going to see. So just go through these exact details so you know exactly what to expect. Shareholders of record as of June 18th, 2024 will receive 49 additional shares for each share held, which will be distributed after the market closes on June 25th. That is a Tuesday, and that means that Chipotle shares will begin trading on a post-split basis on Wednesday, June 26th. So let's just start from a mechanics basis. What the market needs to do is they need to figure out who owns stock at the end of each day. And there's actually a 1-day lag between the date of record and what they call settlement. So oftentimes, like with the Nvidia settlement, there's actually just going to be a 1-day lag. The date of record is a Thursday. Those shares are going to be issued after the market closes on Friday. So it'll actually be Monday that the stock trades post-split. Chipotle has a little bit of a lag here, but shareholders of record on the 18th are going to get those 49 extra shares. Now, what happens between the 18th and the 26th? Those shares and the extra shares will actually move with the stock that ends up being traded. So there is not a way to arbitrage this. And let's say buy shares on the 17th, sell them on the 24th, and get 49 shares for free. That's not the way that this is going to work. All of this is worked out in the background with brokerages. All you're going to see as an investor, no matter when you buy the stock or sell the stock, is that through the 26th, the stock is going to be trading somewhere around the price that we have today, $3,214 as I'm recording. So let's say that's where shares close. On Wednesday, the 26th, they would open at about 1/50th of that, so about $64.28. But instead of having one share, you would have 50 shares. That's how it will look for investors. There's not going to be a huge change or an arbitrage opportunity or anything like that. There's no way to kind of game the market and trick the market. I know that I got a lot of questions about that, about a recent Nvidia video. They've got this stuff figured out at this point. They've been doing stock splits for decades at this point. The other thing to keep in mind is you own the same percentage of Chipotle as you did before. Whether you own 1 share pre-split or 50 shares post-split, you own the exact same amount of the business. The only advantage of splitting the stock price is to lower the actual number that shares trade for. That means that people can buy whole shares. It means that liquidity is a little bit better. So I'm going to dig into exactly what that means in just a second. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So if nothing's actually going to change, then why do companies split their stock price? And there's a couple of reasons for them. One of them is just a legacy reason. It used to be on the stock market, if you wanted to buy stock, you would pay a flat fee, and then often you would pay a fee on the number of shares that you would buy. And you had to buy whole shares. There was not fractional shares that there is today. This is one of the things that if you're a younger investor, you have it much, much easier than when I first started buying stock in the mid-90s. Transactions were $25 or more. You also paid on top of that for the number of shares that you were buying. So you wanted to buy $2,000, $3,000, $4,000 worth of stock just to be able to justify the transaction price, because you also had to pay a transaction when you were selling the stock as well. And you couldn't just go out and buy 0.2 shares of stock, you needed to buy an entire share or 2 shares. So as a result, companies wanted to keep their share price at a number that people could actually afford to buy a full share of stock. So $20 to about $100 per share was kind of the range that companies wanted to trade their stock at. Today, there's not the same impetus to do that. We often don't pay trading fees. You can buy fractional shares. You can just go in and say, hey, I want to buy $50 of this stock. And the brokerage will do everything in the back end for you. And just the number of fractional shares will end up in your account. So some of this is a little bit legacy, but there is a liquidity piece that does actually impact trading. And liquidity is the people who are buying and selling stock on a second-to-second basis. A market maker is going to offer to sell a stock at a certain price and offer to buy a stock at a slightly lower price. Typically that spread is a penny or two for highly liquid stocks. But the higher the price of a stock, the more risk there is in that bid-ask spread. So Chipotle, for example, if you're going to offer round lots, which is 100 shares per lot, and you're going to do that at $3,200 per share, you're going to offer to buy $320,000 worth of stock in just one lot, or sell $320,000 worth of stock with just one lot. That is a lot of money. You need a lot of liquidity, millions of dollars to make a market just in one stock like Chipotle. So that can actually lead to higher bid-ask spreads, meaning that spread between what you could sell a stock for and what you could buy it for now goes from a penny to maybe a nickel or 10 cents. So there's a benefit to lowering the stock price and increasing the liquidity, because at that $64 per share, now a round lot of 100 shares is now $6,400. So now instead of $320,000 to have a bid and an ask as a market maker, now you need $6,400. Now you can maybe have a few round lots available for investors to buy. So that's the liquidity piece. That's kind of the back end of how the market making works. And that's something that investors and companies are actually thinking a lot more about now. There's actually the added benefit as well that stock splits are getting a lot of attention, and a lot of stocks have actually boosted their price after those stock split. Like I said, there's no economic benefit from having a lower share price, but is perceived by the market to maybe be a little bit more valuable by a lot of people. So that's the details behind this stock split. 50 for 1 is a massive number. I couldn't find any record of there being a stock split bigger than that. I'm sure there's one that's happened. If you know about a bigger stock split, leave that in the comment section below. I'd love to look that up. But hopefully these details were helpful on how the stock split works, whether you're looking at Chipotle or whether you're looking at NVIDIA, which will happen at the open of trading on Monday. So let me know what you think about the split in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.